Normal buys payments, freedom buys peace. In this Insibook guide to the total money makeover, we'll turn baby steps into action. Stash a quick emergency fund, crush debt with the snowball, invest 15%, and aim for a paid-off home. Simple, tough, proven, and the fastest way to calm your wallet. Let's do it. It starts with a decision that feels almost embarrassingly simple. Stop pretending money is mainly a numbers game and accept that it's mostly about behavior. The calculator matters, but habits decide the outcome. If the routine is to soothe stress with shopping, to treat every raise as permission to upgrade, to let payments multiply in the background while hoping future me will figure it out, the result will always be the same. More income, same panic. Real change begins when the mirror is more influential than the marketing, when the plan matters more than the pressure to look successful, and when the goal shifts from appearing rich to actually being free. Look closely at what passes for normal. Normal finances run on borrowed money. Normal equates adulthood with monthly payments. The car, the card, the phone, the furniture, the student loans, the store account, the buy now, pay later. Normal relies on a credit score like a vital sign, as if the purpose of life were to prove reliability to lenders. Normal is a house with lights on and smiles for neighbors, and behind the door, a quiet fight that recurs every billing cycle. Normal has no margin. One hiccup turns into a crisis. The outside looks fine. The inside holds a knot that never fully loosens. The antidote is not another app, a better spreadsheet, or a flashier side hustle. The antidote is a makeover of the person who touches the money. The first move is not glamorous. It won't attract "how did you do it" comments, and there are no grand before and after photos, but it's the hinge that turns the whole door. Create a small, fast buffer between you and the ordinary problems of life. Scrape together a starter emergency fund, small enough to be realistic, big enough to stop the bleeding. Something breaks, a tire blows, a copay appears. Instead of swiping plastic and slipping further into a hole, you draw from this little moat and keep marching. This is not a long-term cushion, it's a psychological shield, proof that you've left the old reflex behind. With that small shield in place, the real work begins, dismantling the pile of debts in a way that changes your emotions as much as your balance sheet. List everything you owe, from smallest to largest. Don't sort by interest rate. If raw math could have saved you, you'd be free already. Humans need momentum. Attack the smallest balance with a single-minded focus while paying minimums on everything else. When that first one disappears, roll the freed-up payment into the next, and then the next, and then the next. Wins compound. The sound of a balance hitting zero is addictive. You'll want to hear it again. The pace accelerates because progress energizes. That's the point. Transform the work from drudgery into pursuit. Sacrifice is the accelerant. Sell things you don't need. Downgrade the car that impresses people who won't pay your bills. Eat at home even when the group chat flashes photos of the newest place. Pause streaming bundles and subscription boxes that promise dopamine at the cost of freedom. Pick up extra shifts, drive after hours, flip unused gadgets, declutter closets for cash. The question changes from, "Do I feel like it?" to "Does this purchase move me toward the goal?" The more the answer is no, the faster you move. This stage has a certain intensity that outsiders misunderstand. They'll say it looks extreme. But extreme is paying interest on last year's takeout while staying up late to check if the card processed that minimum payment. Extreme is the pressure that lives beneath a pile of balances. Running hard for a season is sanity compared to drifting for decades. And then a quiet day comes when the last non-mortgage debt is gone. The air feels lighter. The paycheck that used to splinter into a dozen directions lands in one piece. This is not the moment to loosen everything and drift back to old reflexes. This is the moment to fortify. Build a true emergency fund, 3 to 6 months of expenses sitting still, not chasing returns, not trying to be clever. Cash in a boring account doesn't thrill anyone at parties, but boredom is exactly what you want when life goes sideways. A layoff becomes a detour, not a disaster. A surgery is a challenge, not a ruin. The car can be repaired without the humiliating dance with a lender. The feeling that you are one surprise from collapse fades, replaced by a quiet steadiness that's unfamiliar at first and then becomes your normal. Once there's stability, you step from defense to offense. A portion of every gross paycheck, fixed, automatic, and unnegotiable, goes toward the future. 15% is a sweet spot that builds wealth without starving your present. Put it into tax-advantaged accounts first, the vehicles that legally shelter growth. Choose broad, understandable investments, diversified mutual funds or index funds with long histories of weathering storms. Ignore the latest miracle stock. Ignore the "this time is different" panic. The winning move is consistency. Put money in when the headlines are euphoric and when they sound apocalyptic. Over time, the curve bends upward because patience multiplies dollars in a way urgency never will. If children are in the picture, plan for education with the same calm persistence. Use accounts that give tax advantages for education expenses. Start small rather than waiting for a perfect day that never arrives. Avoid the reflex to borrow on the promise of later prosperity. Young people can learn, work, apply for scholarships, and choose schools that don't saddle them for decades. The greatest gift is not a fancy campus funded with your future. It's the lesson that a life without payments is more powerful than a diploma wrapped in debt. Then turn toward the giant that most people assume is immovable: the mortgage. Culture has a soothing lullaby about this one. Everyone has a payment for 30 years. It's just how it works. The longer you listen, the more the timeline calcifies. But nothing in the rules of adulthood says you must serve the bank for 3 decades. Early principal payments work like a sledgehammer. Round up every month. Send windfalls to the loan. Refinance only to drop term, not to lower the payment and reset the clock. Watch the amortization table become your opponent's obituary. There comes a day when the letter arrives and the balance reads 0, and you realize you now live in a house that costs utilities and taxes, but not tribute. The calm that follows is hard to describe to people who have never known it. The stages build on each other, but they also transform you. At the beginning, the process feels like self-denial. Later, it feels like self-respect. Buying every craving is not freedom, it's obedience to impulse. Saying not now to things you can technically afford is the muscle that lifts burdens math alone can't. You stop shopping for identity. You stop measuring your life by what sits in the driveway. You start recognizing how much of consumer culture is designed to keep you docile and indebted. You stop asking whether you can make the payment and start asking whether the purchase aligns with who you're becoming. Tools matter, and some are deceptively simple. A written, zero-based budget gives every dollar a job before the month starts. It tells your money where to go, so you don't wonder where it went. That budget is made in agreement if you share finances with someone else. It is not delivered like a decree. It's negotiated and signed like a treaty. Differences in temperament, spender and saver, optimist and realist, become strengths when both voices are heard and the math is honest. Cash envelopes for categories that tend to leak, groceries, restaurants, entertainment, provide a physical speed bump. When the envelope empties, the month's decision has already been made. You can change next month. You don't cheat this one. Guardrails are not punishment. They are protection for the person you want to be. Insurance is another guardrail. The right types, in the right amounts, stop a tragedy from becoming a financial wipeout. Term life protects dependents without mixing investment promises into the premium. Good health insurance prevents one surgery from undoing a decade of diligence. Disability coverage replaces income if a body can't work. Auto and homeowners policies with proper limits and deductibles keep an accident or storm from demolishing both your property and your plan. You are not trying to outsmart risk. You are refusing to transfer it to a credit card. Some myths need to be retired because they quietly sabotage progress. One myth elevates the credit score into a destiny. It's nothing more than a grade for how well you borrow and repay. Live with no payments long enough, and the number fades in relevance. Another myth treats debt consolidation like a cure. In practice, it often stretches the term, lowers the payment, and keeps the borrower lulled while the balance creeps back. A third myth reveres car payments as inevitable, as if reliable transportation requires being tethered to a bank. Reliable transportation is actually available in cash at a price point below your ego. Driving a paid-for older car becomes a badge of clarity. You realize your self-worth isn't attached to a hood ornament. The culture around you won't clap for these choices. It will entice you to slide back into the stream. You'll hear about zero-interest offers designed to move inventory, about points that will finally pay for the vacation you can't otherwise justify, about how borrowing smart is different from borrowing poor. This is a chorus harmonized by marketing budgets. Step out of earshot. If people whose finances you wouldn't trade are loud against your plan, that's not a warning. It's a confirmation. There's another set of voices worth amplifying, people who worked this path and came out lighter. Picture the couple who entered marriage with student loans bigger than their first-year salaries. They sold the extra car, moved into a tiny place, delivered food after work, and turned date night into a walk in the park with coffee from the kitchen. 2 years later, their balances hit zero. Or the single parent who stopped apologizing for saying no and started listing the monthly non-negotiables on a whiteboard. 3 kids watched the budget meeting, learned how to cook simple meals, and celebrated every milestone with a homemade cake instead of a pricey outing. Or the mid-career professional who looked successful on paper but felt the panic of constant payments. He sold the house with more rooms than he used, bought a smaller one near work, paid it off early, and discovered he liked his weekends better when they didn't revolve around paying for square footage he rarely saw. These aren't fairy tales. They're ordinary people deciding they're done living as revenue streams for lenders. As you move through the plan, something else awakens: the ability to give with power. At first, generosity may be a timid gesture because money is tight and fear is loud. Later, when there are no payments, giving becomes a joy that doesn't require calculation. You pick up a grocery tab for the family behind you without pulling out a budget app. You fund a scholarship at the school that shaped you. You help a sibling through a rough patch without weighing it against an interest rate. The point of building wealth is not to stare at an account balance, it's to expand what you can do for others while living without money anxiety. Work itself changes flavor. When debt dictated your life, work sometimes felt like a sentence. After the shackles are off, work becomes a platform. You can choose roles for their alignment with values instead of their paycheck size. You can launch a small business without praying a thin margin survives your monthly obligations. You can take a sabbatical to write, to travel, to study, to rest and return because you wanted to, not because a lender's due date yanked you back. Time, not stuff, becomes the luxury you fiercely protect. There's room here for nuance that doesn't get enough attention in a world of absolutes. This path requires intensity for a season, not forever. The plan is not a vow to never enjoy a restaurant or vacation again. It is a sequence that earns those pleasures without a hangover. It's also not a competition to show who suffers most. A ruthless sprint toward freedom can include meals with friends, small celebrations at milestones, and margin for the unexpected. What you remove is mindless spending, the kind that numbs, the kind that fills closets and drains purpose. In practical terms, the rhythm of a month becomes simple. Before it starts, you sit down and decide on paper what every dollar will do. You include giving because generosity is part of health, not an afterthought. You include saving because future you deserves, present you's respect. You include essentials and the honest costs of living, resisting the temptation to pretend numbers are smaller than they are. You include whatever debt you're crushing as the priority just below keeping the lights on and food in the house. Then you live the plan. Mid-month, you adjust if the electric bill surprised you or the car needed a belt. Next month, you use what you learned and plan better. Over time, the budget stops feeling like a diet and starts feeling like a map. When the panic that once hovered over your account balance finally leaves, you notice other changes. You sleep better. You stop checking the banking app like a nervous tick. Fewer money arguments happen because decisions are made together while you're calm, not in a crisis while you're angry. You find yourself caring less about what strangers think and more about what your children absorb. They watch you delay, focus, celebrate, and give. This becomes their template long after they leave your house. That is legacy, not just money, but a pattern of wisdom that outlives you. Some details round out the picture. Taxes matter. You use legal shelters to reduce what the government takes and thereby speed compounding. Big purchases require waiting until cash is ready, not because waiting is trendy, but because patience is cheaper than interest. Career moves are strategic. You invest in skills that raise your value, but you do not attach your identity to a title or allow lifestyle to inflate every time income does. Community is fuel. Surrounding yourself with people moving the same direction makes your pace feel normal and your sacrifices less lonely. The opposite is also true. Stay around people who normalize debt and lifestyle creep, and you'll eventually drift their way. Occasionally, a curveball hits that forces improvisation. A medical diagnosis stops the income stream. A family member needs help you didn't plan to give. A business fails through no fault of your own. In those moments, the earlier steps reveal their quiet strength. The emergency fund buys time. No payments, buy options. A paid-for car keeps you mobile. A house with no mortgage is a base of operations rather than a monthly threat. The catastrophe hurts, but it doesn't erase you. This resilience is the difference between a plan built on hope and a plan built on discipline. Some metaphors make the heart of the plan unforgettable. Think of a gazelle spotting a predator in the tall grass and choosing flight with every muscle, every nerve, focused on a single outcome: survive. That is the intensity required for a season when you're escaping a dangerous normal. Think of snow rolling downhill, growing with every turn, not because the first handful was huge, but because you didn't stop pushing. That is how small wins become a torrent of progress. Think of a house as a fortress where every extra principal payment is another stone in the wall, built not with bravado, but with consistency. And think of the future as a field you're planting, not a lottery you're hoping to win. The harvest belongs to the one who sows through every kind of weather. When freedom finally lands, not abstract, not someday, but in your daily life, the contrast is startling. There are no minimum payments stacked like dominoes on your calendar. There is no dread when an unknown number calls. There's no pit in your stomach 2 days before payday. Instead, there is a rhythm that feels trustworthy. Money arrives, you allocate with purpose, you live, you give, you watch balances grow that aren't owed to anyone. You make choices based on values, not invoices. You speak more gently, you breathe more slowly, you stand up straighter. And then you realize something beautiful. The end of the plan is also the beginning of the life you were trying to buy with debt all along. The meals with friends taste better when they're not charged to next month. The vacation is sweeter when it doesn't follow you home like an unpaid companion. The home you live in feels warmer when it's fully yours. The work you do, whether glamorous or humble, is dignified when it serves your aims instead of your creditors. The person in the mirror looks less harried and more present. From here, you build. Patiently, generously, boldly. Investments compound while you sleep. Opportunities to mentor others appear because people can sense steadiness. Causes you care about flourish because your giving is unencumbered. Kids and grandkids learn that wealth is not a toy chest, but a toolkit. You keep a posture of humility because you remember what it felt like to be stuck and scared. And you never stop doing the simple things that got you here. Budgeting before the month starts, saving before spending, giving before grasping, saying no when a purchase whispers promises it can't keep. None of this works without a stubborn refusal to drift. Drifting is how you arrived at normal. The current of advertisements, comparisons, and quick fixes is strong. Swim on purpose. Hold your plan with an open hand where tactics adjust but principles remain. Feed your mind with stories of people who made it out, not entertainment that tells you to upgrade again. Keep the emergency fund topped off. Keep the investments automatic. Keep the mortgage gone. Keep the generosity flowing. Keep the conversation open with the person who shares your table. The maintenance is not flashy, it's freedom's daily practice. Years from now, someone will ask how you did it. You won't point to a windfall or a secret handshake. You'll describe a sequence that anyone can follow. A small starter cushion, a furious attack on every debt, a substantial safety net, steady investing, thoughtful education planning, a house liberated from the bank, and a life built on giving and purpose. You'll talk about months when it felt slow and days when it clicked. You'll remember selling stuff, saying no, and showing up again the next morning. You'll smile because the story is simple, and you'll smile bigger because simplicity is what made it powerful. The truth that launched the journey will still be true. Behavior beats math when it comes to money. The math must check out, yes, but it follows the habits you choose. Choose habits that build strength. Choose patience when everyone else chooses payments. Choose margin over optics, purpose over pressure, and freedom over flair. Choose to live in a way most people won't for a while, so you can live in a way most people can't for the rest of your life. And then choose, again and again, to keep living that way. Not because you're forced to, but because you now know what real wealth feels like. Peace, options, and the joy of using money to serve what matters most.